I don't think it needs to do that, Tom. I think there is a gradual process that's ongoing this year on Chinese renminbi strength, which is both structural in nature and cyclical in nature, where the kind of narrative that we've had for the past few years on China macro in particular is gradually shifting and improving, and the net result of that is a stronger and better outlook for the currency.
So how are we thinking about the US dollar here, Audrey? Are we at the levels, are these kind of the new normal for the US dollar, and where we were maybe the beginning of 2025 was overbought, overvalued? This is where the dollar should be. Is that where the market is kind of weighing out right now?
I think the market is just waiting for a new trigger, Paul, on the dollar and on the currency market in general. We've talked about the structurally bearish view on the dollar. The theme has come and gone. We've had different episodes on tariff headlines, but those tend to fade very quickly. On geopolitical headlines, again, these come and give you a leg lower in the dollar and then fade very quickly. But I think the market ultimately needs the cyclical narrative on the dollar to turn, to be more confident that this weaker dollar story that we have been calling will actually unfold in the second half of this year. Remember, last year we had a very similar pattern where the first half was very much about structural drivers and structural dollar downside. The second half was about expecting the US economy to turn, and it never happened. And I'm very wary right now about the similar pattern that we're seeing happening this year, even though we are now end of February, so it's still very early on.
Yeah, but the fact is, to Paul's point, I'm looking at DXY 97.685, Bloomberg Dollar Index, here churning is somewhat near 1,200, and the answer is the dollar just won't weaken. Why?
I think it's because the US economy is not really weakening that much, Tom. I think we had Q4 GDP last week that was actually underwhelming, but we all knew that would be the case. There was this, bias from the government shutdown, the negative distortion, and now we're getting into Q1 and we're expecting a rebound to take place. And some of the forward-looking indicators that I personally like to look at, like the PMIs, next week we have the Eastern, but earlier this week we had the PMIs, and that's not telling me the US economy is falling off a cliff. And therefore, ultimately, for as long as the US economy remains resilient, there are some limits as to how negative you want to be on the dollar, purely on structural drivers, because the structural story, as I said, Tom, is already in the price, I think.
Right.
Where do you see value out there, Audrey?
Oh, listen to you. You think she's going to make you some money?
Yes, she is.
Audrey,
right now.
You're going to trade off Audrey Childe-Freeman. Audrey, what's your 1 week trade here for Paul Sweeney?
1 week, my comfort zone is about 1 to 3 months, Tom. And right now, I still like the Aussie dollar. I kind of feel it is the clear winner. We've had many reasons to go into the Aussie dollar bullish view in Q4 that was initially domestically driven. The turn in in rate expectation for the RBA. Then the RBA validates early this year, and then internationally we just started the discussion with the Chinese yuan. And guess what? If you like the yuan, your best proxy in G10 is the Aussie. So domestic, international, Aussie upside continues to make sense.
There we go.